Buying a home is one of the biggest financial decisions you'll ever make. If you're not ready to buy yet because mortgage rates feel high, your down payment needs more time, or the right house has not hit the market, believe it or not, the waiting period can still work in your favor. Don't let the home buying delay get you down. Instead, let it motivate you to work towards a more favorable purchase outcome. Welcome to Money Tip Tuesday from the Making Money Personal podcast. Finding the right house can be challenging. For many buyers, it's a process that's hard to predict and in many cases can take longer than expected. The good news is that the waiting period doesn't have to be wasted time. In fact, a few smart financial moves now can put you in a much stronger position when it's finally time to make that offer. If you're one of the many people waiting to find the right house to call home, here are a few things you can do in the meantime to get your financial situation in tip-top shape while waiting. The first one is to obviously build a bigger down payment. This is one of the most productive things you can do while waiting to buy. A larger down payment can reduce your monthly mortgage payment, lower the amount you'll need to borrow, and potentially help you avoid private mortgage insurance, or PMI. Even adding a few extra $1,000s to your savings can make a meaningful difference over the life of the loan. Consider setting up automatic transfers into a dedicated high-yield savings account so your home fund continues to grow without requiring constant attention. Number 2 is to improve your credit score. Your credit score plays a major role in calculating the mortgage rate that you'll qualify for. Even a small improvement could save you thousands of dollars over the life of a loan. This waiting period is a great time to beef up that score for a better purchase position. While you're waiting, focus on paying your bills on time, reducing existing credit card balances, avoiding new debt, and reviewing your credit report for errors. Think of this period as an opportunity to strengthen your financial profile before mortgage lenders take a closer look. Number 3 is to pay down existing debt. Lenders pay close attention to your debt-to-income ratio when evaluating mortgage applications. The lower your monthly debt obligations, the more attractive you may appear as a borrower. Take some time to do the math and figure out what your debt-to-income ratio is. If it's uncomfortably high, make some changes. Reducing debt can improve both your borrowing power and your overall financial flexibility once you become a homeowner. For more information about optimizing your credit score and just credit scores in general, listen to one of our podcast episodes titled "What the Heck is Credit and Why is it Important?" for an expert explanation on building and maintaining a good credit score. Check the link in the show notes to listen. A fourth thing to do while waiting to find that perfect house is to build an emergency fund. It's easy to focus entirely on saving a down payment, but homeownership comes with unexpected expenses. Water heaters can fail, roofs can leak, and appliances don't always cooperate. Before buying, aim to have an emergency fund that can cover several months of living expenses. Having cash reserves can help prevent a surprise repair from turning into a financial setback. Number 5 is research your future neighborhoods. The waiting period can also be a great time to become a more informed buyer. Doing preliminary work and research is always a good idea because it helps you further solidify where you really want to live. This is important because it'll decrease the chance of buying a home so abruptly you didn't get a chance to consider the location. So you'd put in the offer, sign the contract, finally move in only to realize that you don't really like the neighborhood. These days, things can move quickly, so having a firm understanding on locations can help you rest easy knowing you're making the right move when you buy. During this waiting period, spend some time researching things like school districts, property taxes, commute times, local amenities, and future development plans. It's also a good idea to research any environmental factors, human-caused like contaminated water or something natural like flooding risks. While researching, visit neighborhoods at different times of day and on weekends. What looks perfect during a Sunday afternoon may feel very different during a weekday rush hour. Number 6 is to create a realistic homeownership budget. Many buyers focus primarily on the mortgage payment, but that's only part of the equation. Homeownership brings with it many added costs. Take some time to do research and develop a budget that will include not only the mortgage, but added payments you can expect to make down the road, things like property taxes, homeowners insurance, utility costs, maintenance and repairs, and any HOA fees if they're applicable. A useful exercise is to practice the future payment. If your current rent is $1,800 and you expect a future housing payment of $2,500, try setting aside the extra $700 each month. This can help you test your budget while increasing your savings. And number 7 is to avoid major financial changes. If you expect buying within the next year, it's wise to avoid taking actions that could complicate a future mortgage application. Be wary and try to avoid changes that could disrupt your financials, like taking on large amounts of new debt, financing expensive purchases, frequently opening new credit accounts, and making large unexplained bank deposits. Consistency and stability often work in your favor during the mortgage approval process. So in conclusion, waiting to buy a house can feel frustrating, especially when you're eager to move into a place of your own. But the time before your purchase can be one of the most valuable parts of the home buying journey. By strengthening your savings, improving your credit, reducing debt, and preparing for the realities of home ownership, you'll be positioning yourself for a smoother purchase and a stronger financial future. When the right house finally comes along, you'll be ready to move forward with confidence. If there are any other tips or topics you'd like us to cover, let us know at tcupodcast@trianglecu.org. Also, remember to like and follow our Making Money Personal Facebook and Instagram pages, and look for our sponsor, Triangle Credit Union, on social media to share your thoughts. Thanks for listening to today's Money Tip Tuesday. Check out our other tips and episodes on the Making Money Personal podcast.